Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. This is the weekend market review for July 14th and 15th, 2018. Here's where we'll take a look at the various different charts in the markets. I'm going through these basically live, daily, weekly, and monthly perspectives and trying to get a better understanding of what's going on in the markets. So starting with the 10-year U.S. Treasury yield on a daily chart. Right now, it looks like it still has a little bit more consolidation to do, possibly another dip lower to retest this 2.759 yield that we hit several times. Why do I say that? It's struggling, breaking above the middle Bollinger Band as well as the 50-day moving average, and it's finding resistance at the 50 RSI level. So until that can break higher, I think that this 200-day moving average at 2.7 is going to serve as a magnet, if you will. Looking at the weekly perspective, we are finding support here at the 50 RSI level, which is important, and I think ultimately that's going to hold. It might stay here a little bit while longer, but I think ultimately we'll circle back and make a run for the new highs in the 10-year Treasury yield. Monthly perspective, here's the consolidation that's taking place after the breakout. We are starting a very, very strong multi-year uptrend, in my opinion, and so long as we stay up above this 60 level on RSI, which served as resistance many times prior, now serves as support. If we stay above that, this uptrend that basically started in 2012 and finally broke out here in the middle of 2016, it definitely looks like it is intact. Now, taking a look at gold here, gold is interesting. We appears that we've hit a double bottom here in price, but we've got some positive divergence. You want to see this particular double bottom hold with positive divergence, and then ultimately you want to see this rally. This is not a buy at this point unless this price breaks back above 1260 rather soon. So I'm definitely watching what's taking place here. Gold on the weekly doesn't look so good. It broke down on the RSI, and so until this 38 level has been recaptured to the upside, there's now 50 and 200 week moving average support now serving as resistance right above it. So as far as I'm concerned, above 1200 is still doesn't invalidate this particular breakout here, but it doesn't look strong at this point. But when you look at the individual miners, as we have in our other video, many are starting to look like they want to turn around. So this could be the final flush out before new highs in gold. Gold monthly, this is what I'm looking at here. So we broke out above this downtrend since 2011, and now we're just consolidating back above this trend line. So long as we're above here, still intact and still firm, but the RSI needs to recover that 50 level and fast. For the time being, gold is weak, but again, price is still suggesting that we have much upside potential so long as this breakout is not invalidated. Junk bonds look very good. I'm not really going to go into those detail here, but bottom line is the markets appear as if just looking based on one metric, like they're in good shape because junk bonds show no sign of weakness at this point. Weekly looks strong back above the 50 RSI level, and you look at the monthly. That's where it kind of gets interesting. If we can break out above that 69 level in RSI, we've consolidated through time here and are now moving back higher after finding support on the middle Bollinger Band. Very possible that junk bonds could be setting up for a leg higher in the not too distant future. Crude oil daily, so far it's finding support on the RSI level, 50 RSI. But you've got the PPO breaking below zero, so looks like some consolidation is still necessary in that particular sector. On the weekly, it's interesting to note we kind of are making multiple highs here in price, but we're making multiple lows, consecutive lows here in momentum, as exhibited by RSI. So that suggests that crude oil is still likely going to make another push lower in the coming weeks and months ahead. despite this inverse head and shoulders, I think we could possibly retrace all the way back to 50, possibly before moving back higher. But we'll see. NASDAQ looks good on a weekly and monthly perspective. There's slight divergence on the monthly, but that's not powerful enough for me to start casting doubt on this in this rally. Russell's kind of starting to pull back a little bit. You see some negative divergence, new highs, but lower highs in momentum here, so that's something to keep an eye out for. Same thing here on momentum, new highs, but lower momentum. That's interesting. But on the other hand, monthly is suggesting that momentum is strong. We're at basically all-time highs in momentum here, which is leading price. So longer term looks good. Shorter term might be showing signs of a little bit weakness. S&P looks pretty good here. Looks great on the weekly. It looks like it wants to break above that 2,800 level and move higher here. Let's see what happens. And on the monthly, it's got some divergence, but negative divergence where price is near all-time highs, but it's not being met by momentum highs. But we're still in exceptionally overbought and very high momentum territory, so there's no reason to suggest that the pullback is coming. U.S. dollar is creating multiple basically negative highs in momentum, so that suggests that the dollar might be on the verge of pulling back. But yet on the weekly, it's still recaptured that 60 level. So long as it's above 92, you want to give weight to the upside. But there are multiple signs that I'm seeing. Looking at various different charts that suggest that the dollar might have peaked here. Now it's above the 50 RSI in the monthly, just peaked back above it, but it's struggling to break above the middle Bollinger Band. We've got PPO curling above zero. Will it break higher? We'll see. But it's also very possible that we start circling lower and moving back lower. If the 50 RSI level can hold, that'll be your sign on the monthly that the dollar is indeed starting to roll over. Weekly chart. Weekly chart is very interesting because this is the World ex-USA index. It's very, very closely tied to the dollar, and it's been weak because of the dollar strength. It's struggling to break above the 50 RSI level, rather 50 week moving average. So you want to see what happens. If it can break above that, then this can set up, especially with the pending dollar weakness, it can set up for a very strong rally. You also see here on the monthly, it's found support here on the basically just above the 50 RSI level, curling back higher. That's what you want to see. This is basically a bullish flag. If it breaks higher here, then 2,400 is the next target. And so whereas the U.S. markets might be doing well, world markets may do very, very well in the coming months ahead. So definitely an area you want to watch. Anyway, guys, stay tuned for more videos in various different sectors. You've got oil. We want to start taking a look at uranium, continuing our look through precious metals, as well as biotech stocks in the not too distant future. Appreciate your support. Follow us on StockTwits, Twitter, and YouTube at Moniology, and check out our Patreon campaign. Any pledge would be much appreciated. Thanks, and have a great week. Take care.